Palantir, ticker PLTR, one of the most polarizing stocks on the market. Over the past year, it's up more than 400%. In the last month, it's down 16%. Right now, it trades between $155 and $160. So here's the question. Is Palantir still going higher, or has the bubble already burst? Well, on paper, the story looks unstoppable, right? Revenue just hit $1 billion last quarter. That's 48% growth year over year. And US government sales are up 53%, and commercial is up 93%. And Palantir's rule of 40, well, it's off the charts, it's 94%. But here's the problem. The stock trades at a PE of 709. That means investors are paying $709 for every dollar of profit. That's even richer than Nvidia. So, is this hyper growth justified, or are we staring down a speculative bubble? Now, there's one signal I am watching closely. Palantir just landed a $10 billion 10-year contract with the US Army, consolidating 75 separate contracts into one. And that deal could lock in decades of cash flow if they execute. In this video, I'm breaking down Palantir's growth, its risks, and the one metric that might tell us whether this stock still has room to run or if retail investors are about to get burned. My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. It's a good thing because I don't sell hype. I break down the numbers so you can make smarter, more confident investing decisions. All right, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. Palantir is an AI company that offers big data analytics, helping organizations integrate, analyze, and act on massive, complex data sets. Currently, they're one of the biggest defense contractors in the States, and most of their revenue currently comes from government contracts. Though Palantir does have a very fast-growing commercial segment, and you're about to find out just how fast. And here's the kicker. They're not just selling software. They're selling themselves as mission-critical infrastructure. Currently, they're one of the biggest defense contractors in the United States, and most of their revenue comes from government contracts. But Palantir does have a fast-growing commercial segment, and you're about to see just how fast that growth really is. Now, before we dive deep into the financials, let's look at what the stock has actually done. Over the last 52 weeks, Palantir has traded between $32.47 and $190. Its 52-week high was recorded on August 12th. The stock price has been trading sideways since that time in the $150 to $160 range, at least for the last couple of weeks. And that's the pause, right? The big question. Is this just consolidation before the next breakout, or the calm before the storm? Over the last month, Palantir is down 16%, but zoom out a little. Year to date, it's up 106%, and over the last year, it's up more than 415%. If you bought Palantir stock 5 years ago and just forgot about it, you'd be sitting on a 1,500+% gain today. So the stock has been a little bit like a rocket ship, but even rockets eventually run out of fuel. So does Palantir have enough fuel to keep climbing, or are we already near the ceiling, right? Well, here's where things start to get interesting because the numbers tell a story that's really hard to ignore. In the second quarter, Palantir reported a record $1 billion in total revenue. That represents a 48% increase year over year and a 14% jump from the previous quarter. So you can say that growth isn't just strong, it's accelerating. U.S. domestic revenue grew 68% to $733 million, and inside that, commercial revenue exploded 93%, while government revenue climbed 53%. Another tailwind, their customer base grew 43% year over year, and 10% just from the last quarter alone. That is real adoption. And the result? Palantir reported $386 and $27 million in net income, up 144% year over year. That's about 13 cents a share on a GAAP basis. So they're not just growing, they're actually printing real profits, and that's rare in the AI space. Then there's Palantir's Rule of 40. The Rule of 40 is a quick test for software companies. Basically, you add revenue growth plus profit margin. Above 40 is strong. Below 40, it means the company isn't balancing growth and profitability well. Palantir's score? 94%. That's not just strong, that's elite territory. Management also updated their guidance for both the third quarter and full year of 2025. For Q3, they expect revenue between 1.083 and 1.087 billion with adjusted operating income of as high as $497 million. And for the full year, they expect US commercial revenue to top 1.3 billion, up 85% year over year. And they've raised full year revenue guidance to as high as $4.15 billion. And that's management basically telling you they've still got lots of rocket fuel in the tank. But look, rockets don't just go up forever. And that's where the risks start to creep in. So here's the big question. What could actually push Palantir even higher from here? Because a 400% run isn't normal, and yet the story is not slowing down. Given Palantir's current figures, what could possibly push the stock higher? Actually, this is a question that's come up a lot in my Discord group. And to answer that, we need to look at the growth catalysts. Just a couple of months ago, the US Army awarded Palantir a new enterprise agreement. This deal, worth up to $10 billion over 10 years, consolidates 75 separate contracts into a single, streamlined framework. That means the Army can buy what they need when they need it in a way that's more cost efficient and cost effective. And here's why it matters. When the Pentagon decides that you're mission critical, other departments and even other countries start paying attention. Palantir also announced a 5-year expansion of its partnership with Lear Corporation, a global leader in automotive seating and e-systems. Lear is scaling its use of Foundry, Warp Speed, and Palantir's AI platform across its worldwide operations. More than 11,000 Lear employees already rely on Palantir's tools to streamline supply chain, procurement, quality, and finance workflows. Just in the first half of 2025, Lear's IDEA program, powered by Palantir, delivered over $30 million in savings. And that's the kind of ROI that makes other CEOs pick up the phone and say, hey, we want that too. And that's not just the US or auto industries. Palantir also announced a multi-year expansion with SOMPO Holdings in Japan. Now Foundry is embedded across their subsidiaries, supporting senior care reporting, modernizing insurance claims, and even automating risk evaluation with AI agents. This deal alone is expected to bring in $10 million annually, and it's already in the second expansion since 2023. And that's a clear signal. Once Palantir gets in, clients don't want to let them go. Lastly, Palantir isn't just selling software, right? They're building an ecosystem. When your tools are deeply integrated into how a company runs, switching providers isn't just expensive, it's painful. That focus is called stickiness, and sticky revenue is gold for long-term investors. But let's be real, every rocket has a potential crash landing, so what could potentially go wrong with Palantir? Well, it's execution. Palantir's AI platforms are everywhere, government, healthcare, manufacturing, but these systems require constant updates, patches, and flawless execution. One major bug, one delay in rolling out a critical update, and you're not just talking about angry clients, you're talking about lawsuits, lost trust, and lost revenue. Then we have security risk. Palantir is basically a treasure chest of sensitive data. That makes it a prime target for hackers. A single breach could be catastrophic, not just financially, but reputationally. When your brand is built on trust, one mistake can cost you billions. And let's not forget competitive risk. Some of Palantir's biggest customers could decide to build their own platforms. If that happens, Palantir doesn't just lose a client, they create a rival. And then we have the elephant in the room, valuation. Palantir trades at a PE of 709. That means investors are paying $709 for every $1 of net profit. For context, that makes Palantir more expensive than Nvidia. So you have to ask yourself, are you buying into long-term growth or are you paying for hype? Because stocks with sky-high PEs can soar on momentum, but they can also crash twice as hard when reality sets in. And with a 60-month beta of 2.6, this stock is more than twice as volatile as the overall market. That's not just a roller coaster, that's strapping yourself into a rocket with no seatbelt. So what does Wall Street think? Well, a consensus among 22 analysts rate Palantir a hold. The high target price is $200, which suggests as much as 28% upside from the latest close. The average analyst score, well, it's 3.14, and it has been trending upwards for the last 3 months. And honestly, I agree. Palantir's growth prospects and management guidance, it looks strong. But that sky-high PE is enough to scare away conservative investors. So here's my take. Palantir is the definition of high risk and high reward. If you can stomach the volatility, this could be a name you'll end up bragging about in a decade from now. If you can't, there's safer plays out there. But what about you? Are you buying into Palantir today? Do you believe in what they're building? Let me know in the comments below. And while you're there, if you found this video helpful, do hit those like and subscribe buttons so other people will find it as well. And also, the next few quarters could make or break the stock, so you won't want to miss any of my future updates. That's it for me today. Thank you so much for watching, and I'll see you next time.